Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show.
Good morning, everyone. Good to see you. Hope you are doing well this morning. I say good morning. I know there's people in the other parts of the world where it is not morning time, but it's morning where I'm from. I've got my coffee set up, my cat dad mug, the standard. I hope everybody's doing well. We've got some interesting moves happening this morning. The Bank of England cut interest rates. I haven't really looked at it, to be completely honest, but I am going to assume that this was a dovish cut, a hawkish cut, in which they do cut interest rates. They guide forward, however, that they may be less willing to cut interest rates in the future. It's a little bit weird because one of the misconceptions of new traders, and it's a natural mistake to make, is to think, okay, we got a rate cut, so shouldn't the British pound go down? But what makes markets difficult? Markets would be really easy if it was always just about what's already happened. What makes markets so incredibly hard to predict is that the market is all about what's expected in the future. The market trades based on future projections, not based on what's happening in the here and now. And that concept can be very hard to wrestle with for a while, right? Because it's really difficult to try and separate your brain into thinking this way. But if you are going to be bullish or bearish on the dollar or the British pound or gold or a stock, you have to recognize that the market is always looking ahead into the future, what is likely going to happen and impact these things. So when it comes to rate cuts and rate hikes and rate holds, the market trades on future projections today, always. It's very strange, but the market never trades on what's happening today. The market always happens to be trading on what's in the future, unless there's some big surprise that happens today. Even then, the market will start to think about what's going to happen in the future based on what's happening today. So what I mean by that is if you get a shock, a surprise, like, some sort of geopolitical volatility, spike in the Middle East, something happens, right? Or a tragic, oil spill or something like that, right? Those things that happen today will impact the market, will shock the system, and immediately the market will start thinking about how is this going to impact things in the future. Trading options teaches you this very well. Bulent, man, it's so true. Good to see you. Good to see everybody in the chat. I know there's a lot of warm welcomes and hellos. I hope everybody's doing well. Can I just ask the audience really quick too? If you're somebody who is a regular, let's say you attend at least one stream a week, can you just type here or me or I do or something? Just make yourself known in the chat. I'd love to see this just because, I had someone years ago that I listened to every day. His name was Rob Booker. He's since retired from the trading industry and educational world. For the most part, he does some things, but he's not nearly as prominent as he once was on YouTube. And it's like the second I go back and I listen and watch those videos, a wave of nostalgia hits me, and I'm just immensely grateful to listen to his teachings. And I'm like, man, this guy really, really made a difference in my life just listening to him. And, it hit me this morning. I was listening to him and I was like, wait, do people feel this way? Do some people feel this way with me? And if you do, I am beyond grateful for that. And I just had that wave. I was listening to it on my way into work today. I thought, you know what? If there are people out there who listen to what I say every day, they hang on every word like I do with Rob Booker back in the day. Um, I hope that I'm helping you. Know that when I look at my mentor, wasn't really my mentor. He didn't, personally show me the ropes of how to trade, but I learned so much from this guy. When I listen back, I just feel a lot of gratitude. I'm like, wow, that really, really helped. So, wow, you guys, you're making my day. A lot of people here saying that they watch every day. Just know that although I don't know every single one of you personally, and that there's only one of me and many of you, for those of you who are super regular to my streams, I genuinely am so thankful that you're here, and I love that we get to do this. I'm passionate about markets, and I hope that you kind of find that same energy here. No nonsense, no BS, just learning about markets. No Lambos, no fake lifestyle. Like, if you've made it to these streams and you're here every day, my hope is that you realize you've reached the promised land of just real trading. That's what we do here. Good to see you guys. I love you guys. Anyways, yeah, heartfelt moment. Pound dollar is pushing higher here this morning. At the same time, you have the S&P 500, the NASDAQ higher today. Almost like it just completely erased those losses here really quick. Take a look at that. You had 2 days down and the market's pushed back up. I had a stock fall on me this morning. No fun at all. Let's talk about it. Let's face it head on. I have shares in Fortinet, which is a cybersecurity company. Got absolutely crushed on earnings. Down 21% here today. I'm sitting on an $8,000 loss on this position. Of course, when it comes to stocks, this is the difficulty of individual stocks. They can move way more in a day than most other things outside of crypto. So I'm sitting on a loser here. I'm thinking about what I'm going to do with this position. I'll be talking about it in an upcoming video on my second YouTube channel, Trader Nick Stocks. For those of you who are super regulars, I'm going to make a prediction too. So I mentioned my person that I listen to quite a lot, was Rob Booker. He was part of the reason I was so interested in FX for some time and made a move in time towards options and towards ETFs and stocks. And I've always traded those things, but listening to him kind of really lean into the options and stocks and stuff has really I've followed him in many ways to that area of the market. And so I imagine some people here are going to be like, yeah, you know what? Well, maybe not a good representation, but I've had other stocks that have done phenomenally. Like I'm long Meta, and this thing has been an absolute beast. I'm sitting on a good winner on this one. That's a challenge with stocks, right? Some stocks go up, some stocks go down, and it's unlocking a whole other side of things. I'm long Amazon, which has been doing pretty well here recently. I'm long Tesla, which has been doing really sideways. I've also sold some call options against my Tesla position. I have 400 shares. I've sold 2 calls against my 200 or half of my position. PayPal. I know I'm not supposed to talk stocks on this channel, but I just wanted to let you guys know that even, I've done this for so long, there are still days, no matter how long you do this, if you are over leveraged, this would be a much worse day for me. But I'm not over leveraged. So waking up to a stock down 21%, that's no fun. If you're not a stock trader, a comparable feeling is where you have gone to bed and you have a stop loss. Let's say you're long gold, I guess, and you wake up and you've gone from a really profitable trade all the way to hitting a max loss on the stop out. That's a comparable feeling to when a stock drops really hard. It's no fun. But if you're not over leveraged, you live to fight another day. Not everything's going to work perfectly. The market itself continues to push higher. And I want to take a look in terms of Edge Finder bias. Let's take a look. Nick, how did you set up your boxes with your stop loss on TradingView? I have some videos on how I set up my charts. I would encourage you to go search that, like Trader Nick, how to set up TradingView, where I go in detail on everything. But these are just boxes. You can change the big thing people sometimes want to do is extend it right. That's what I like to do. Makes it so it shoots past your price levels. And then I have stop loss wise, what I do is I have this horizontal line, but then I've actually made templates so I can do calls, sold, put sold, sell entry, stop loss, trail, target. So if I have a stop loss, right, I could mark it as a stop loss there, and then it just adds the text for me. Just little things. If you spend 50,000 hours on a chart, you start making automations to make it a little quicker. So Dow Jones moving a little bit higher. NASDAQ is really the bounce back winner right now. Tech stocks are they're just all the rave right now. It partially makes me nervous, to be completely honest, how popular tech stocks are. Because the market is expensive. Like let's not mess around. The stock market, the NASDAQ, it's expensive. And I don't mean the price that you see on TradingView. That's not what I'm talking about. Stocks priced against their earnings are expensive. In fact, I know this is, again, we're not going to go into too much detail about individual stocks on this channel because, again, it's not very popular here. But I want to show you some details. I'm going to tease our new product, the Stock Box. Give that a second to load. So when I'm talking about expensive, what am I referencing? I'm not talking about the stock price or the ticker price or the NAS 100 price, or that's not what I'm talking about. When I say expensive, the stock market trades long-term based on earnings. Earnings or prices of stocks versus their earnings are pretty dang expensive out there. Let me see if I can find some examples. I mean, maybe the stupidest one, a great company, very bullish on the company. Valuation, though, ludicrous. Palantir, trading at hundreds and hundreds of levels of PE, 700 plus PE. Stock just jumped like crazy here recently. Forward PE, massive, right? Let's see, what else can we find? There's some stuff that's reasonable, but there's just a lot of stuff that is priced very expensive. CrowdStrike does a negative earnings. I'm trying to find some good examples of this. Even like Delta Airlines, like there's some stuff that's just priced. We're looking at the price versus its earnings. And what I like to look at with the new stock box feature is the 3-year average, right? So show me the valuation of certain financials, and then show me the 3-year average for that stock. Very important distinction there. But when we start looking at some of the stocks that are out there that are trading, very expensive, let's maybe look at like a Meta, for example. Meta, I guess, is not horrible. Meta is actually trading below its 3-year average because it has such a jump in its earnings. Microsoft, I believe, is a little bit expensive. Yeah, so you have Microsoft trading pretty expensive. My point, though, is you don't have a lot of stocks that are showing. Actually, we have a tool for this. We have a better tool for this, actually. Let me see. Financials, PE ratios. Apple is trading around a 31 PE. It's a little bit high compared to its historical average. We could go. I'm just trying to think of like hot stocks. Somebody name a stock for me. Also, yes, we have news. Let me not miss it. Name a stock that you think is, I don't know, like a really hot stock other than Palantir. We could also look at NVIDIA. That's an easy one. Unemployment claims coming out in 30 seconds. We'll see how this moves markets on a macro level. But I want to get back to this thought of, are stocks expensive? Are indices expensive? And I would make the case that, yes, they kind of are. Robinhood, we don't have it in the system, and I'm kicking myself for it because it's one of my biggest positions. It is expensive as anything, though. All right, news. Let's see what we got for our unemployment claims. Let's see if it causes any stir this morning. Expecting 221,000 unemployment claims to drop. No change just yet in the market for the most part. 226K. Okay, that's what people are saying in the chat. So there it is, 226. So just slightly above expectations. Dollar index, just given just a tiny bit back here. Nothing crazy. Not a shocker. Also not a huge one anyways. Here's an update on the macro level. You've got S&P 500 higher, NASDAQ higher, Dow Jones higher, Russell higher. Gold, choppy as anything, shot up, shot back down, shooting back up again now. Bitcoin, I am bullish on gold, by the way. I want to take a look at that. Bitcoin's at 116. Oil prices remaining muted. That's good for the inflation story. Dollar index actually trending lower today. We'll take a look at that. So yes, unemployment claims came in a little bit soft this morning, but nothing to worry too much about. We were expecting 221K unemployment claims. We got 226, a little bit higher than expected. Nothing too drastic there. Let me finish my thought here. So for those of you who are just tuning into the stream, we're having a discussion about whether or not indices are expensive. And you know, I can hear it through the screen. Sometimes I go off on these rants on one market and people are like, hey, I don't trade that. Can we talk about gold? Or, hey, I don't trade gold. Can we talk about currencies? Or, hey, I don't trade currencies. Can we talk about indices? Right? I get those messages all the time. Why do you think I look at and trade all of these things? The big reason for that, the simplified reason, is because fundamental analysis doesn't adhere or respect one chart. Fundamental analysis is the whole system. And there's a lot to learn, even if you don't trade the NASDAQ. If you say, I don't really trade NASDAQ, or I don't really trade gold, I hate trading gold, you should not discredit the analysis, especially if you're a fundamental analyst. All of these charts matter to you. Can I ask, if you are somebody who is an aspiring or current fundamental / macro analyst or trader, if fundamentals matter to you and play a part in your analysis, I mean, imagine there's 526 people watching between the different places we're streaming. Imagine a lot of you guys care because we just watched unemployment claims to see if that would give us some juice today. If fundamental analysis play a part in what you do in the markets, type me in the chat for a second. Let's just watch the chat. If you are like, yep, I use fundamentals, they play a part in what I do, give me a yes or a me or something in the chat. Lee, my friend, you get it. I saw your message. Hold on, I'll find it. I don't trade the bond market, but I watch it. Truthfully, same. In fact, this is the psychotic side of being, well, not psychotic. It makes logical sense. The crazy part being about a fundamental analyst, I watch bonds every day and never trade them. I do sometimes, but it's really infrequently. I rarely trade bonds. Yet I watch the bond market every day. We need to, wow, there's a lot of you guys. Love it. My people, my fellow macro traders. If you don't trade indices, or you don't trade gold, or you don't trade the dollar, you should not discredit doing some analysis on it anyways, because all of these markets, they're like that. They all move together. They all impact each other. What's happening in the US impacts Europe. What's happening in Europe impacts the US. You know, what's happening with gold prices is a reflection of what's happening in other things. They all matter. So with that out of the way, let's continue our discussion to talk about indices. Are they overbought? Are we in a bubble? Are we in an overpriced stock market? But Nick, I trade the euro dollar. Well, then pay attention, because this impacts the euro dollar. It all does. They all impact each other. Okay? If the stock market is overbought, that tells you something very important about the state of markets. The stock market's a really good indicator of sentiment, risk on versus risk off. The bond market is a really good indicator of multiple things, but the economy, it's a reflection of liquidity in markets, or not liquidity, but stimulus in markets. Is there going to be rate cuts? The bond market is key because it kind of tracks what the Fed's going to do really closely. The stock market is a reflection of what I love, which is industry trends, like exciting things like AI, like these sort of stimulating trends happening in markets. So anyways, question is the stock market expensive? Well, let's look at like some of the high flyers really quick. If we look at NVIDIA, and what I'm looking at here, by the way, if you're like, hey, I have the Edge Finder and this is not Edge Finder, you're correct. This is not the Edge Finder. This is our stock market tool that we've been working on for the last 2 years. It's called the Stock Box. Stock Box is now available if you're a stock person. If you're not, then no worries. But, and I'm not sure why we're not getting our 3-year average here on NVIDIA, but for the point, let me show you. NVIDIA is trading, we had this huge spike up. Actually, in some ways, the price to earnings on NVIDIA went skyrocket. Actually has come down because earnings have been really solid for the company, essentially causing the price relative to earnings to actually come down, but still trading at 57 PE. And you just have a number of stocks that are trading very expensively. And so when the stock market, the index level, is trading expensive, right, relative to its earnings, what that does, when you have, here's like a Home Depot, like trading at a 26 versus a 3-year average of around 22, you have stocks that are rising in their expense, how expensive you are paying for their respective earnings. So I'm not talking about the stock market. The indices are expensive because the price has gone up. I'm talking about the price versus the underlying market's earnings has gone up. The stock market can go up and earnings can go up at the same pace, and that's not an overbought market. That's why stocks over time tend to go up, right? Because earnings tend to grow over time for companies. So that's why there's a natural drift in stock indices to move higher. But there is a danger in that where people think, oh, they start to think stocks only go up. It's not true, right? Because the stock market, let's just say, for example, that the earnings of the stock market are growing like this. Well, let's make it a little bit more obvious. Let's say the stock market earnings are growing like this, but the stock market price is growing like this. What happens? Well, typically, the long term is that stocks tend to follow the actual earnings of the underlying market. So we tend to see a correction. So I'm not bearish on the market. I'm not looking to short the market, because trying to time where that turn is, that'll get you into some trouble because it's difficult to time that. But in my view, you look at the stock market now and you say, okay, it's a little bit expensive relative to the earnings. I'd be more interested in buying the stock market if we were to see a correction in price, a pullback after such an extensive run. I'd be more interested in buying at that point. Again, I'm not a bear. I'm actually quite bullish on the markets. I have been for pretty much all year long. And most of the time, by the way, I am bullish on stock markets because they tend to go up over the long term. It's actually foolish to spend a majority of your time bearish the markets, especially in the last few years. You would have gotten destroyed. So most of the time I am bullish. There are times where I'm bearish, or in this case, on the cautious side. Cautious is most of the time the closest I get to bearish on the stock market. So what I mean by cautious is I'm not going to be adding a whole bunch of stock long positions or index long positions, etc. Right? So I'm not going to be buying aggressively up here. If the stock market were to give me a corrective pullback, then I start to get a little bit more attracted, because then the risk to reward looks a little bit better. In fact, actually, we have data, guys. We forgot to check this. Let's look at market sentiment and let's look at the latest. So this comes out every Thursday morning. We get Ooh, we get the latest AAII investor sentiment survey. And this shows us a respondent statistic. People are given three choices. Do you think the market is, well, do you feel bullish, neutral, or bearish on the stock market in the next 6 months specifically? That sentiment changes week to week. In fact, in April, we saw sentiment incredibly bearish. Now we saw sort of a rise in bullishness. Another way to look at this chart, by the way, is scroll down. If you have the Edge Finder, scroll down on this page. It's really cool. You've got bullish sentiment over time. And bullish sentiment has been on the rise for a while, but now we're seeing a little bit of stability here and actually a spike in bearishness in the weekly survey. Really interesting. So when we look at the investor sentiment survey, we have 43% of people saying they're bearish on stocks, 22% of people saying they are neutral on stocks, and 35% of people saying they feel bullish on stocks. So this is really interesting to me because when you get, I would say that this is actually still very high bearishness. People are still concerned or negative about the stock market. 43% is the biggest reading of the three, and typically this leans bullish. Historically, I think the historical average is, I want to say like 40 in terms of bullishness. So we do have more people bearish than bullish. What that tells me, guys, is that even though I've just described like I'd be waiting for pullbacks, that tells me that sentiment might actually favor this market kind of running higher just to kind of spite the bearishness. We see this very frequently when the market is very bearish on the market, or when investors, traders are very bearish on the market. We see the market do a great job of just kind of running against them for a while. And so that may still go on for some time. You may get another leg higher in the stock market. For me personally, I don't have a strong conviction to buy at these levels. If I go to my top setup simplified view, the NASDAQ is getting a bullish rating on the Edge Finder. But where sometimes people go wrong with the Edge Finder is this is not telling me to go out and buy the NASDAQ today. That's not what this is telling you. The Edge Finder, when it has NASDAQ as bullish, what that means is that looking at sentiment data, technical data, and economic data, it's leaning bullish. Okay, that doesn't mean I'm going to go take a trade at this second. But if we were to get a pullback, for me personally, this gives me more confirmation that I like the setup in the event that you were to get a pullback. Then I look for longs. So I'm still employing my own, technical approach and strategy, risk management, all that stuff. The Edge Finder is just telling me that most of its factors are leaning bullish, right? I mentioned the stock box earlier. If you guys are interested in getting a copy of the stock box, if you are interested in individual stocks, if you trade options, if you trade ETFs, if you trade, if you're looking, whether you're an investor, a trader, whatever, if you want to track financials data, if you want to track, we have this new tool, the stock analyzer tool, which is my favorite on the list so far. You can select a stock and it will give you all sorts of readings. So like, let's do Amazon, for example, just really quick, and then I'm going to move on from this. Like Amazon currently is actually, in my view, kind of a buy. Let me just pull up the chart for Amazon quickly. I already own shares, but if you were to get a dip again, this would probably be one that I'm looking to add more shares to my existing position. Why? Well, because most of our indicators, the PE ratio, forward PE ratio, price to sales, not so great, debt to equity, revenue growth, earnings growth, return on equity, profit margins, and gross margins all look pretty good relative to its own history, right? That's what we're really basing this off of. And so we built this system around that helps you to track stocks. Now, the top stocks page, which is the final domino, is almost ready. Now, the top stocks page, what this will do is you'll click on this page and it will list stocks that are getting the highest score and confluence. Amazon's going to be top of the list, I can tell you right now, because almost everything is suggesting bullishness based on our list of metrics and indicators. If you don't have the stock box, there's a lot of people who already do, but if you don't have the stock box, we're doing some early kind of, it's sort of its relaunch. We launched it 2 years ago. We've been overhauling it and rebuilding a whole bunch of features. We're doing a relaunch of the tool. Last month, we did a 40% off discount on the Edge Finder. We're going to extend that here. For those of you guys who want access to the stock box who don't have it, here's how you can do it, or here's how you can get access. Especially if you already have the Edge Finder, if you're an existing Edge Finder user, we'll give you extra discounts. Here's how you can get some information. I'm going to drop the link here in the chat. This is where you can speak directly to a member of our support staff. If you already have the Edge Finder and you're interested in getting Stockbox, we offer significant discounts to existing users. If you buy the Edge Finder, you don't get the Stockbox. I saw that question from Raphael. They're two different products. Each one of them has been a monumental development feat for us. Stockbox has been, a 2-year project. Edge Finder's been a 3, almost coming up on 4-year project for us. But the Stockbox is for people who are more interested in stocks and options and ETFs. And if you're like me, I look at both, right? So I trade stocks, options, ETFs, and then of course, Forex, commodities, indices, et cetera. So if you're interested in the Stockbox and you already have the Edge Finder, we do offer substantial discounts to it. Click this message right here, send a direct message to our support team about getting access to it, and we'll hook you up for that 45% off discount that we were doing last month on the Edge Finder. We'll extend that to you for the Stockbox, if that's something you're interested in. But don't miss it, because the Stockbox, I'm telling you, if you've watched the Edge Finder over the years, you've seen it become a beast. I know a lot of you guys watch, the streams for a long period of time. The Edge Finder has become a beast. The team behind the scenes, we've worked so hard to bring it up to where it is. Stockbox is next up. It's going to get really, really cool, really fast. All right, so I know I've spent a lot of time on stocks and indices here. Let's move on. Let's take a look at some other stuff here. I'm going to close down the stock box for now. So if I look at, let's look at what's happening with the dollar here this morning. The dollar kind of faked me out a little bit, to be honest. I didn't take any losing trades off of it, but I shorted the pound dollar, took a quick profit on it, and I was looking to get back into pound dollar shorts, but the dollar has just lost its momentum. NFP pretty much killed it, right? NFP pretty much turned things around on the dollar index, because if I go take a look at the economic heat map for the US, and we do this every day, but bear with me. Looking at our set of indicators here, we're back to sort of a mixed sentiment about data. Actually, this is going to be worse than expected once this updates. It's on an hourly timer. So once this updates, guys, you're actually going to be looking at another one that is bearish for dollar, because we had jobless claims that missed expectations to the upside, meaning worse for the dollar. So we're very, very neutral on the dollar at this time, based on the economic heat map. So for me, what this tells me is, okay, I can't really justify taking a whole bunch of dollar longs. Again, what I love about making my approach systematic is that my feelings and I wanted to be long the dollar. I can tell you, naturally, I was like, oh, I'm loving this for a possible reversal. We may see a big swing higher in the dollar. Part of me wanted to buy it right here, right there. But I didn't, because that's not what my system was telling me. So systematically, right? Systematically, I have to respect what I've built, right? The tools that we've built are there to assist. I'm going to respect them. And thank goodness I didn't buy the dollar, because it's just dropped back. NFP was a miss. It changed the calculus on the Edge Finder dramatically, very quickly for the dollar, and it's no longer bullish. We have to adjust to what the data is telling us. So let's talk a little bit about bigger picture currencies. Which currencies are looking strong? Which ones are looking weak? Now, mind you, this is not based on price action. This is based on economic data. So these are not like strongest versus weakest currency moves today. I'm talking about strongest to weakest currencies relative to their economic outperformance or underperformance. I know that's a lot at first, but if you're new, bear with me. You can also read this if you want to. Actually, let's just do a recap. Nothing wrong with a recap. What are we looking at here? The economic surprise meter. It's a really popular tool. A lot of traders really like this one in the Edge Finder. We've gotten a lot of positive feedback about this tool. I don't blame them. It's like the easiest thing for me. If I'm trading currencies, this is the page. This is the page I look at. It's so easy once you know what it does. The currency economic strength page showcases economic scores for each currency. A higher score indicates that the majority of key economic metrics like GDP, PMIs, CPI, etc., have recently been strong relative to economic forecasts. That's the key part. They've been strong relative to economic forecasts, right? It's all relative to what was expected versus what came out. That's what this chart is showing you. So a lower score indicates that the majority of key economic metrics have recently missed expectations relative to their economic forecasts. So when we read this chart, this is not saying, let me clear the room. This is not saying that the Canadian economy is the best economy in the world. That's not what it's saying. It's saying the Canadian economy, relative to expectations on the Canadian economy, has been relatively strong. Like, okay, we thought the Canadian economy was going to be this way. It's actually outperforming that. That's what this chart is showing you. Once you understand that, you understand, oh yeah, that's really useful for currency trading because this gives you fundamental analysis at a glance. So when we look at this, first of all, the average of the whole list is in the positive territory. The average economy globally seems to be outperforming expectations. So that shows you, okay, things are relatively good compared to expectations, right? Do you trade major news events? All the time. I don't trade the spike. I'm not a scalper or a day trader like that, but I always pay attention to major economic data because it impacts our scoring. And the ultimate thing that we do on this channel is we don't trade the spike. If you want to go to the casino and play roulette, do your thing. But what we do here is we actually understand, we track what the economic data is suggesting, and we're looking at it and we're saying, how does this impact the calculus or the trend of the economies that we're discussing? So anyways, the strongest currency on this list is, let's see, it's going to be the Canadian dollar. The weakest on this list is going to be the Australian dollar, right? The Australian dollar getting a really weak score. If we wanted to break this down further, here's how you can do this. If you want to understand this reading better, all you have to do is pull up the Australian, since this one's getting a weak score, let's open up the hood and let's understand why the Australian dollar is getting a weak reading. Why is it getting a weak reading? Well, it's because relative to a lot of forecasts, the data has been coming in soft. So GDP growth came in soft, right? Manufacturing PMIs came in lower than previous. Services PMIs came in slightly better than expected. So that's bullish for the Australian dollar. Retail sales were also better than expected. That's bullish for the Australian dollar. CPI came in came in softer, 2.1 compared to 2.2 expected. The producer price index came in soft, or came in down to 3.4% compared to the previous number of 3.7. Unemployment rate also ticked higher. That is weak for the Australian dollar. And employment change was positive. That's bullish for the Australian dollar. Most of our metrics here are suggesting a little bit of softness for the Australian dollar. Does that make sense? That's how that kind of works out. So when I'm trading currencies, that's why I look at this first and foremost. This is to me, the easiest way to look at it is we can take a look at like NZD CAD or, actually let's look at like NZD CAD, which I'm already long. And we're seemingly holding support pretty well here. We can tighten up our zones just a little bit. We're seemingly holding well so far on this NZD CAD trade. I do think we have more room to move higher. I'm already long in this one. Let's look at what else we would search for here. Euro Aussie. We'd be looking primarily long. So I'd be interested in either a pullback into support or a break and retest, looking for long continuations, right? And if we take a look at, let's see what else. The Japanese yen looks strong. So maybe I
This is sort of like a proxy for shorting the stock market in some ways. There is some high correlation between the Aussie yen. I shouldn't say high. Let's actually check it. Let's check the correlation between the Australian dollar yen versus the, let's do it against the S&P 500. Let's just do SPX. Okay, so let's see if there's any correlation here. You can see there it is. So right now, especially, but let's actually broaden this out. Let's try and make this, let's do something crazy. Let's do a 500 look back period. And what you can see here is that generally speaking, there is some level of positive correlation. It broke away for a while here in 2020 and 2021, but there's a pretty high correlation between the Australian dollar, Japanese yen versus the S&P. Let's just change this also. Let's try 200. I think that might give us a little bit more of a detailed line. Okay, there you go. So you can kind of see what I'm getting at. We're looking at a weekly chart and we're comparing the correlation between the S&P 500 and the Australian dollar versus the Japanese yen. And what you can see is that there was this period where there was little correlation. There was this period for this suspended time where there's been pretty good correlation between the movements of the stock market and the movements of the Australian dollar versus the Japanese yen. Why is there a correlation? Says David. Great question. The Australian dollar is more of a risk-on currency. Now, what that means is that when the global economy is doing well, Australia is an export kind of nation. They export a lot of raw materials. If you export raw materials, how does the global economy impact you? If there's huge demand for Chinese manufactured goods because the world economy is doing pretty well, and the Australian dollar positively is impacted by that, the global economy being good typically is good for the Australian dollar. What else is it good for? It's good for stocks. Global economy being strong is good for stocks. The Japanese yen is a safe haven currency. So when people are scared, they buy the Japanese yen. When the economy is concerned, they rush to the stability of the Japanese economy. So if you're in an environment where the stock market's going up, typically the Australian dollar versus Japanese yen is also moving up. Fundamental analysis is everything. That's what I'm trying to get at. You know, that's why all these markets are connected. That's why it drives me crazy when people say, I don't really care about the NASDAQ or I don't care about currency pairs. Well, maybe if you don't trade fundamentals, but if you trade fundamentals, that should be completely just to remove that from your vocabulary. If you're a fundamental analyst, you no longer trade just gold. You no longer trade just the dollar. You may execute trades on that, but you analyze everything. That's what true fundamentals are all about. You have to understand the whole picture. You can't just look at one little piece of it. You have to kind of understand what's happening. I hope that makes sense. What's up, Bashy? Good to see you, man. So, if CPI is lower than expected, isn't that bullish? No. CPI lower than expected is bearish for a currency because it suggests that a central bank could cut interest rates more readily. If you have an inflation problem, the Fed combats that by keeping interest rates higher for longer or even raising interest rates like they did in 2022. That's super bullish for the currency. Rate hikes, super bullish. Rate hold, super bullish, especially if other currencies are getting their rates cut. Inflation is sort of a lead indicator in some ways of what the Fed or the central bank is likely to do about it. And what the Fed does about it or the central bank does about it, that's what matters. You're so smart, Nick. Great value here. David, I appreciate it. Thank you very much. Thanks to everybody who's hanging out with me this morning. I know I've been, the streams have been a lot of fun recently. I've been, a lot of theory, a lot of, you know, market mechanics. We've been talking about stuff. I'm enjoying the streams a lot recently because I am looking at the setups and trades that I'm in, but I'm also just really deep diving on what I'm thinking about and what I'm doing in the markets and why.
And I think also another thing that's been cool is I've been talking more about the development of the Edge Finder, like the tools that we built and why we built them the way we built them. And it's been cool because I get like a flood of messages of people later on who are like, that economic surprise meter, that's really cool. What about doing this? And that's how the Edge Finder got built. The Edge Finder has been built the way it's been built because people tell me or tell us, there's a team of us, they tell us what things they think we should add next or what things are confusing to them. When we get the same question about something too many times, we rebuild it. Because if something is not intuitive pretty quick to people, we want to redo it because we want the Edge Finder. The whole point, our whole focus, when you use the Edge Finder, I want you to open this product up out of the box. Just like when you get an iPhone, you get it. It makes logical sense. The setup procedure for an iPhone, it's natural. Same thing with the Edge Finder. If you want to learn fundamental analysis, I don't want to scare you with our tool. I want our tool to be a simple way to, I'm not sure what just happened here, a simple tool to start studying it. Last week, we ended our Sale of the Year event. Today, I want to do something just before we toss the show over to Marco. If you missed the Edge Finder 40% off sale, we're going to do something. There we go. That was driving me crazy. We're going to do something. Today, we're going to just extend it just for the day. For those of you who did miss it, who did want to take advantage of it, but missed the cutoff, we're going to do something just today where if you missed the Edge Finder 45% off sale, here's your chance to grab it. Click the link. We'll drop the link here in the chat for those of you guys who want to pick it up. I also mentioned earlier that we are going to also extend that just today for the stock box as well. So if you want the stock box, if you're already an Edge Finder user, if you want the stock box, if you want our memberships, whatever, we'll just do this as a last chance for people who missed it last week. We ended it. Here is your revival by 1 day of the Edge Finder 45% off discounts, the biggest that we do all year long, and it's going away. We'll just open it up just for the day. So there you go. Up next, guys, we have the one and only Marco from Marco's Trading Journey taking over the stream, talking trade setups. Do not miss him and his value that he's going to be bringing to the stream. We'll have him up just after this quick break. Stay tuned. Hey stream viewers, if you're outside of the United States, I have a cool offer I want to tell you guys about thanks to our partnered broker, 8cap. 8cap is currently offering the ability for new depositors to get access to our premium tool, the Edge Finder, completely for free. Now, how this works is basically you create an account and deposit a certain amount of money into that account, and they will essentially buy the Edge Finder on your behalf. So it's a win-win-win. They get a new client for a reputable brokerage, you get access to the Edge Finder and a great brokerage to trade with, and you'll be supporting the show by signing up with 8cap. Now, here are the steps if you want to find out more about this specific offer, but make sure to follow them specifically as we list them out on the screen here. Step 1, navigate to a1trading.com/8cap. That's a1trading.com/8cap. Step 2 is to follow the instructions and to make sure you use the specific link on that screen to sign up for your new 8cap account. Step 3, complete the required deposit amounts and contact their team as instructed on the page. So if you're interested in finding out more about this offer, head over to a1trading.com/8cap, and we'll also be dropping the link to this down below in the live stream chat as we speak. Like I said, make sure to follow those instructions specifically if you'd like to get access to a free copy of the Edge Finder if you meet the deposit requirements as listed on the website. Full information, like I said, can be found a1trading.com/8cap. Now back to the stream.
Hello everyone, welcome to my segment of the live stream. So I hope everyone is doing well. And if you have any questions, chart requests, psychology, trading strategy, risk management, you can put it in the chat. So I do have the chat open on the side. And also let me check if you guys can hear me. Okay, the source is correct for the microphone. So I can see some comments about the Bank of England interest rate decision. Let's take care of that. So if we take a look at the pound on the 1 hour, on TradingView, you have these little news bubbles on the bottom. And basically what happened is we had a rate cut for the Bank of England. Okay, so we had a rate cut. The previous number was 4.25. The forecast was 4, and the actual number came in the same as the forecast. So because of that, yes, you maybe did get some selling of the GBP. Also, if you look at the Edge Finder, the GBP is kind of weak in terms of the US dollar. So GBP against the US dollar was weak in these areas. So we got a sell-off. Now, your next question may be, Marco, if there was a rate cut that is dovish for the pound, why did the pound gain value against the US dollar? So why did that happen? Why didn't this chart go down like this? Well, first, if the actual number comes out the same as the forecast, that gives the market a lot of confidence. And then the second thing the market watches is what are the future projections? Okay, so what are the future projections with GDP, with inflation, with the interest rate, with the employment data? And if you look at the future projections from this meeting, you're gonna see the guys at the Bank of England that are running the central bank are concerned about inflation. You can see their inflation projections, and inflation in the next few quarters is forecasted to go up a little bit. Okay. And I'm talking about the headline CPI inflation. So if inflation is going up and the bank is currently cutting rates, that's not really the best decision, because if you cut rates, it's going to make inflation go up even more. So that did raise some concerns that maybe it's not the smartest thing to just keep cutting the interest rate like crazy. Maybe there will be a pause at the next meeting. So in the end, the event was dovish, but the future projections were hawkish. And if the event is as forecasted, meaning there was a cut the same amount as the forecast, then the future projections actually moved the markets. So the future projections were hawkish. There is concern about inflation. That is why you maybe had a bullish reaction here. Or it could be because markets already had a pretty big sell-off, and this was just some profit taking from some long-term traders. But in my personal opinion, it was because of the future projections. It is something I have been closely watching with every central bank event. Usually you get 8 meetings per year, and usually 4 out of those 8 meetings have future projections attached with the meeting. Okay, so next future projection for the Fed, for example, is coming out in September. So that should be really market moving. And through my studies of central banks, the future projections can have a massive impact on the markets. So that's my take on the Bank of England event. Hey, FX Bashi, how are you doing? So let me see the comments. Gold, Swiss yen, gold, rate hike. Let's go, Marco. Time to make some money. Yes. Okay, so you guys want to see gold. My watch list for today is gonna be USD CAD is no longer on the watch list. Took a loss. Pound US dollar took a loss as well. But gold is on the watch list. So for gold, I like this. I like the fundamental story. I like the overall uncertainty. You know, who is going to be the next chairman of the Fed? Powell's out. Who's going to be the next one? Is it going to be a dovish leader? What will Trump do with the tariffs? Will he increase the tariffs? Will he put on new tariffs? India, China, Switzerland. So tariffs are still back in focus. There is trouble at the Fed. So there are some power plays at the Fed. People are saying that they want to see a rate cut and they want to possibly suck up to Trump. And that all creates uncertainty in the overall markets, thus pushing the price of gold higher. So Edge Finder reading right now, I believe it's neutral, but it could turn bullish quickly. So if I get a bullish reading on the Edge Finder, and if I get a breakout out of these highs with some decent momentum like this, I will be looking for buy setups. So pretty much I'm looking for the same thing as Nick is looking for. So I'm looking for a breakout. I don't want to get stuck inside of this range. You know, if I buy here and then the price stops me out, and then I buy again with another attempt with a tight stop loss, and then the market goes up a little bit, but then retraces, takes me out. So I think right here, this is an area where you should be careful. You can just get chopped around until you see a decisive breakout of the highs. So gold, I'm really bullish on. I think the technical chart is looking great. If you zoom out a little bit, looking very bullish. And if we do get a breakout, I will be looking for some buy setups. Okay, so let me see. Rest of the comments. Financial Juice is a more accurate source of info. Yeah, Financial Juice is awesome. It's free as well. So I highly recommend everyone to check out Financial Juice at least once per day, in the mornings preferably. Okay, so once per day, Financial Juice, market moving news, that's your filter. Check it out. Marco, there is some concern, but Bailey said he's not expecting inflation to go higher. As he stated, BOE Governor Bailey, yes, rates are definitely still on a downward path. Yeah, that is true. But if you go through the rest of the news feed on Financial Juice, you can see that there are actually some concerns about inflation, and Bailey is only just one guy. So there's multiple people, as there are 12 people on the Fed, there's multiple people voting for an interest rate decision. And yeah, there's definitely concerns about inflation. But as you said, there is also the statement, yes, rates are definitely still on a downward path. So rates could be on a downward path, but they may not be as aggressive as people thought, or there may be a bit of a pause for a few months, right? So before the meeting, everyone was expecting this to happen with the rates, just a steady decline. But now there may be like a smaller decline or maybe a bit of a pause. So that is why I'm saying that the actual future projections were more hawkish than expected, because prior to this meeting, inflation concerns were not raised as much as they were on this particular meeting. So I hope that clears things up. Again, that is just my opinion, my analysis. You may have a completely different view, and that is totally fine. That is why you have the markets, multiple people expressing their view of what is going to happen. So Euro GBP. Okay, let's see. Euro GBP, Euro dollar. Sure, Sneaky Pete. So first, Euro GBP. This one I personally don't have on my watch list. Let me quickly check the Edge Finder for fundamentals. So let's see that bullish. Okay, we're getting a bullish reading on the Edge Finder. Personally, I would be a bit skeptical on this one. Okay, so yeah, the euro is definitely a bullish currency right now. The pound is possibly becoming more neutral. It was pretty bearish, but now it may be becoming more neutral. So I don't think Euro GBP is the best pair to trade right now. If I was gonna execute a position, I would like to see a breakout of these highs, because we got some massive selling pressure on Monday, 28th of July, and on the 7th of August, basically today. So not the best story for buy setups right now, in my personal opinion. And the reading is not that convincing. It's not like a very bullish reading. It is just slightly bullish on the Edge Finder. So in my opinion, there are some better plays out there. If this candle didn't exist, if today wasn't a big red day, then this would have been a bit better to look for a buy setup. But right now, there is some selling coming, and we are stuck at this level of resistance, okay, on the daily chart. Let's zoom out a little bit. Let's see the situation. Yeah, you're getting some resistance. You're getting some pretty significant resistance, if I'm being honest. This is a resistance all the way from November 23. So I would wait for a breakout. If I was going to be bullish, I would wait for a breakout of those levels. Now, I did see the euro dollar, which I do have on the watch list right now. So I am interested in looking for euro dollar longs. Okay, so let me tell you what I'm thinking. I actually like this price action. So we got some sellers right there. We definitely did. But then we had buyers step in with some pretty nice momentum on the 1st of August. And yesterday, we went above the 20 MA. So that's a good sign. Edgefinder was bullish. Right now, it switched back to bearish. So I'm bullish overall. I think this trend line is getting respected right here. Or, well, you could say we have kind of broken it. But I do think if I zoom out just by a general assessment of the trend, I would say this is in an uptrend, right? I know the euro is currently a pretty strong currency. For the US dollar, me personally, I'm a bit neutral right now, but rate cuts may be coming in September. We will see. I don't think they actually will come. I don't have such high confidence as maybe some other investors and traders have. But if we get some low inflation data, if we get a really bad NFP print in September, we could definitely see the dollar lose value. So overall, I'm looking for buy setups. I'm just waiting for a bullish reading for the euro dollar on the edge finder, and I'm waiting for an entry basically on the 1 hour chart. What I like to do is I like to look at the 1 hour chart, and then I look for entries such as a flag or a break and retest or any sort of other very simple entry pattern. So that is my analysis for the euro dollar. Financial Juice is way better than Forex Factory. I use both. Like I use the Forex Factory just to see what is going on with the scheduled news events, and I use Financial Juice to see what is going on with the breaking news. So I use both. Both are free, so they're absolutely great. Marco, could you help me look at EU? Okay, so we covered EU. Why gold technical are not stable this week? Well, if you're looking at gold technicals, technical analysis for gold, we're just range bound, you know? So this can happen for quite a long time. Gold is known to range for quite a while. I mean, just look at some of these other periods. Okay, so this was pretty descending, but you know, you're getting these clusters of range bound price action here as well. And it's pretty common. Here you could say, here sort of descending slash flat. So it's normal here, see. That is normal behavior from gold. It is just, in my opinion, it's waiting for a bit of a bigger catalyst, right? So if the dollar starts heavily losing value, gold could definitely go up. Gold could definitely start gaining a lot of value. So I'm just waiting for a breakout. Very simple. Waiting for a breakout of this level. Ayman wants NASDAQ 100 or Ayman. Is it Ayman? Sorry if I'm butchering your name, but NASDAQ 100, and then we're gonna cover silver because silver is actually moving quite nicely. NAS is very bullish. My opinion on the NASDAQ is I want to get into buy setups. I was looking at this pullback. I was actually pretty happy. You shouldn't be happy as far as trading goes, but I was excited to see a bit of a bigger pullback to get in at a nice level of support. What level was I looking at? Well, this one or this one. So I was looking at those levels to get in. I didn't want to buy here on the top. In my opinion, we were a bit overextended. Unfortunately, or maybe fortunately for investors, the pullback was very short-lived. So we had a push up very quickly on Monday. So this was tariffs. Okay, this was a big tariff scare. Crazy Trump putting huge tariffs on India, China, Switzerland, and that makes the stock market, that creates uncertainty, which makes the stock market lose value. So quick rebound, Not the best thing I want to see. I would have liked to see a bigger pullback. So that is what I'm still looking for. I'm still looking at my 2 levels of support, here and here. Still looking at these levels, and if the price does decide to pull back, I will get in. I'm not gonna try and hunt the price. I'm not gonna try and get in right here. That's not how I want to trade. It doesn't give me a good risk to reward either, because if I get in here, I'm gonna need to put the stop loss right there, and that gives me a pretty big stop loss. But if I get in a bit lower, let's say here, and put my stop loss like this, I can then aim for the highs as maybe the first profit target. So I usually don't have multiple profit targets, but you can definitely see how your risk to reward and the size of your stop loss can be much more efficient, much better if you wait for the price to pull back a little bit. If the price does decide to fly without me, I will look for a pullback a bit later. So we cannot continue just flying forever. There will be a pullback sooner or later. When it happens, I will get in. Okay, so I wanted to do silver. Let's see, silver. Silver looks very interesting. I did get taken out of my buy setup. It was a nice winner. So like 1.6 R. Looks like I just got taken out, and now the price is continuing to go up. In my opinion, silver does follow gold. So I'm interested in some buy setups on silver as well. What am I waiting for? Well, I'm waiting for a bullish reading on the edge finder for silver. And the second thing, I'm waiting for a bit of a bullish breakout. So I'm waiting for a bit more of a push to the upside, and then for a nice high probability buy setup on silver. So my main focus is gold, but if gold moves, most likely silver will follow, especially because I think silver in the last few days has been looking a bit better than gold in these last few days. So yeah, silver usually catches up to gold. Let me check on the gold to silver ratio, which is always a smart thing to check. GUSD. See? Let's see. Let's do the weekly. Okay, so we're kind of near the equilibrium, you could say. So this chart measures how much more overvalued is. Wait. Okay, so how much more overvalued is gold against silver? Again, you have these extremes where you know that silver is a much better play than gold, right? Now we're kind of in the middle. So I would say there's no longer a big edge in watching this chart. We are pretty near the equilibrium where there is sort of a fair ratio between gold and silver, between the price of gold and the price of silver. Silver. So I like it. I think it can go up. I'm just waiting for some confluences, and then I would be interested to get in. This level is actually not a bad level. I mean, it looks better than gold just by looking at technical analysis. Gold has been stuck in a flat range from the 23rd of April. Silver has just broken out of a massive range. So silver has just broken out of this massive range and is continuing to steadily grind higher. So silver is on the radar. So Jason says, which platforms do you use to watch the news? So, well, of course, I use the Edge Finder, which is fundamental data. Then Forex Factory calendar, okay? And the third one would be financial juice. Okay, so Edge Finder is a paid software, but it kind of compiles all of the news in a very easy to read format. So it saves you a bunch of time and it gives you some very interesting insights, not just with fundamentals, but also with technical analysis and seasonality and some other stuff. Forex Factory, I just want to know when all of the most important news will happen. So I use it as a calendar because it is a calendar. Financial Juice, I watch usually 2 times per day, maybe once, maybe like once or twice per day. I watch Financial Juice. I see what is the most market moving news that is coming out. Okay, so GPJPY. Okay, 2020 was a yearly range mode period for gold. Yes. For all of you guys reading this, be careful if you buy gold now or in a few hours. There are many signs that it will not rise, but I'm not sure. Well, yeah, everyone should do their own analysis according to their own strategy and follow the work that you did. So stick to your own strategy if you have proven that it works, if you have proven that you have a trading edge. Ashram says, Euro Yen, your view, please. Jaden, stay away from gold. Do you expect a pullback on the NASDAQ? Right now, we had a bit of a pullback, so I don't expect one to happen like tomorrow or next week, maybe in like 2 or 3 weeks. No one knows, and it doesn't matter. It doesn't matter. So I'm watching it, and when a pullback happens, I'll be there. I'll be ready to take advantage. GPUSD, where do I see adjustment numbers? Forex Factory doesn't show it. Yeah, Forex Factory does show revision numbers. You just have to check out NFP from last week. Check out the NFP numbers. You're going to see that there is a revision number implemented in there. So Forex Factory does show the revision numbers if that is what you are referring to. Okay, so GPJPY was the first request. Let me see. Daily grinding higher, now has reversed. Let me check the edge finder. Let's see. So very bearish reading. So you could consider some sell setups here. You could consider if we get more selling pressure. Right now, I'm not convinced as far as technical analysis goes. So yes, we did break this trend line right there. We definitely did break it with a lot of momentum, but we didn't really continue, right? So this was just one trading day. I would like to see more selling pressure, and then I would consider getting in on a sell setup. So until we get more selling pressure, I'm going to be patient on this particular currency pair. Okay. So let's see. Euro Yen. Let's see, Euro Yen. Let me check the edge finder as well for Euro Yen. Bearish. Okay, so we're getting a bearish reading on this one. Kind of the same thing. Kind of the same thing as GBP/JPY, to be honest. So one more thing, Euro right now is pretty strong. So would I short the Euro right now? I personally would not. So I would be more patient with this one as well. If the Euro starts deteriorating, if the Euro starts losing a lot of strength, I would first wait for a bit more of a sell-off on the daily chart. So for a bit more of selling pressure right here on the daily. That is what I personally would look for. I could say that the selling has increased with these 3 daily candles, but then we had a big blue candle, and the fundamentals are still a little bit problematic with me for Euro Yen. I think the Euro is a pretty strong currency, so I wouldn't want to short it. I wouldn't want to short it right now. Okay, let's see. GPUSD, right now I'm being patient. GPUSD, I did take a loss. Right now I'm reevaluating my stance on this currency pair. Currently the pound seems to be gaining some strength. The US dollar seems to be going from a strong currency into more of a neutral territory, which you can see on the DXY. So we had a really strong dollar, and now it seems to be losing steam, losing value. So both of these currencies are a bit neutral, in my opinion. Okay, both the pound and the US dollar. That is why for the pound US dollar, I'm being more patient. I think the euro dollar right now is the most interesting currency in my personal opinion. Okay, and last few questions because I have ran out of time. So do you ever scalp? No. I only swing trade. Scalping is very, very hard, very tough on the psychology. You need to be really fast. So in my personal opinion, swing trading is easier and it fits my personality better. Will I scalp in the future? No one knows. Maybe I'll consider it. Do you set an alert on the chart for each market you're watching? If it's very interesting, yes. I have an alert set for gold. I mean, why not? See, I have an alert for gold. You have the feature, so use it. Okay. FX Bashy says, I agree, don't trade the 1 minute. Yeah, so scalping is very, very tough on the psychology. I know a lot more profitable swing traders than I know scalpers. So that should also tell you something. It is for people with a very high level of self-control and patience, absolutely. So if you're just new to trading, I would say start with swing trading. It gives you the best possible chance to succeed. And that's it. That's it. The summary would be on the watch list. My main things are NASDAQ buys, gold buys, euro dollar buys. Those are my 3 favorite instruments for today. Thank you guys very much for watching. See you tomorrow in the live stream, and good luck with your trading. So see you.
If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat as well as in the description of this live stream. Check out Vantage. Now back to the show.
Okay, what's up, people? Hope everyone is doing good. Glad to be back on the stream. As always, guys, we'll go through a bunch of markets today. I'll share my opinion, what I'm looking at, any pairs I'm trading, I'll share that as well. If you guys are interested to see my opinion on any particular pairs, let me know. And of course, if there's any particular time frames you want me to refer to, let me know as well. But I'll probably mainly focus around USD and yen and Swiss. I quite like the Swiss currency pairs at the moment. So I'm actually in a trade on Aussie CHF. That's the only position I'm sitting on at the moment. I hopped into this position about 4 hours ago on the 4-hour chart. Looking for a pretty big swing trade with this one. I've been eyeing up Aussie CHF buys probably since the drop here in April, because price has just recently made new all-time lows. And typically, looking at the history of this market, every time we do kind of make new all-time lows, we do have pretty big recoveries. Price has been doing that continuously for some time, and I'm kind of betting on that happening again. Of course, waiting for my moment to get long, not just jumping in straight away, but I'm seeing a lot of corrective behavior on the way down. Looks like support is starting to hold. Bit of a consolidation is starting to build up, and I've kind of anticipated the breakout here. I've bought there with stop loss underneath the low, and I'm seeing if I can target this lovely range here, which is kind of what started that big bearish move back in April. I do think price can come back to revisit that. So I did enter a position, like I said, 4 hours ago on the closure of this candle just above the highs there. We've broken through the counter trend line, so that has a really good positive confidence for the buys. Stops below the low, and I'll hopefully be able to trail this as we tick along. But that's the only trade I'm in at the moment. I'm quite bullish on a lot of the CHF pairs. I do think Swiss is bound to lose some of its strength, and I think CHF pairs could be forming a bit of a bottom. But now that I'm in the Aussie CHF, I'm kind of just going to focus on that currency pair, not kind of trade all the CHF pairs, because they'll probably all fail or all work at the same time. There's no point to spread risk that way. I've been also keeping a close eye on USD pairs. Actually, that was probably my main focus coming into the week, but I've seen some price action that's kind of made me a little bit more cautious with the DXY. Basically, how aggressive we were retracing. So we had this lovely bullish move last week. So around Thursday anyway, before NFP happened, I was very, very bullish on the dollar, looking for a higher low to buy, and then, not looking for a higher low in the DXY, looking to short euro, short pound, Aussie dollar, any of those USD pairs really. I was looking for opportunities on those pairs, but the DXY was giving me nice bullish structure. I was looking for another higher low to bank on some more USD strength. And that's still very much my take. We still do have these higher highs and higher lows. We did break some structure to our left there as well. So I'm seeing positive bullish structure, really nice momentum as well. The only key thing was how aggressive we were off the back of NFP on Friday. This was a very aggressive candle. And typically that's not how I want my pullbacks to look like. I want them to be a lot more corrective, a lot slower. And if they're going to be aggressive like that, normally I give the trade a bit more room. I kind of wait for bigger pullbacks, because when things are as impulsive as they are here, typically we normally have bigger pullbacks anyway. It's not common for us to be as aggressive with this move and suddenly just turn bullish again and fly. So I would typically wait for a bigger pullback. So I was speaking a lot on this area here. Price pretty much is coming to that area. So I'm looking for buying opportunities, but I'm waiting for us to kind of settle first, maybe consolidate. Then I'm waiting for a big shift of momentum, and that's kind of what I'm looking for to make me interested in buying USD again, and perhaps shorting euro dollar, which I'm pretty much looking for the inverse. So euro, same thing again, a really aggressive bullish candle off the back of NFP. We've seen a bit of a continuation off the back of that. I've talked about this area as a really healthy place for a short. I like that area again for euro to the downside. Now I'm not necessarily looking for a home run here with this trade setup. Not necessarily looking for a push all the way back to the lows and maybe further. That could happen, of course, but I wouldn't necessarily bank on that. There's a pretty big support level to our left here, which of course is what gave us the swing low. If I can get a move from this zone into that zone, I'll be very happy with that position. I'll probably leave positions to run just in case we do continue, but if I see a lot of rejection around here or anywhere kind of around here, I probably would just pull the trade, because I'm not quite convinced with USD strength longer term. The trend, I would still argue, is still with the buyers here, so I'm not going to be so aggressive with the shorts. But for now, I like what I'm seeing. We're starting to slow down a little bit, seeing some bearish candles on the 4-hour chart. I would like price to kind of spike up a little bit higher before I do really get interested in shorting euro. But if we can become a bit more corrective, slow down, I'm looking for a strong shift momentum and looking for some sell opportunities. So euro, that's what I'm eyeing up. Pound USD, pretty much the same situation. Of course, we just had some pound news, which pound did react pretty bullish to and gave us a pretty strong candle there in the 4H. Now, I have been looking for a retest of this level for a short. So I got price support once, twice, and again, potentially could act as resistance again. But of course, we just had the news come in, and a very bullish pound was the result of that. So I'm kind of backing away a little bit from this area, because of course we are breaking above that, but it doesn't necessarily make me change my bias, because this is still our swing high, this is still our swing low. Technically speaking, price does need to break through the high here for me to well and truly change my bias on pound. So I'm still looking for a short, but I do need price to start to slow down, start to consolidate a little bit, and start to show some bearish momentum coming back in. At this moment in time, we don't have that. So the idea for pound USD is still some shorts. I would still see this as a pullback. Yes, we kind of picked up momentum, but we're still in a kind of a healthy area. We're tapping into some areas of supply to our left over here. I wouldn't say that's my first choice to as an area to short pound, but if I can see some healthy rejection there, as I said, price start to slow down, maybe consolidate, give us a strong shift of momentum, maybe some strong bearish engulfing candles on the 4H. That could turn out to be a nice place for a short, but it's up to price to really invite me into the trade before I do anything. At the moment, we are still looking pretty bullish. So going forward with pound USD, I'm still looking for a short. As with the DXY, I'm still looking for a swing to the upside, but price action is the most important thing. It's all well and good and having this bias, but yeah, potentially maybe pound USD wants to rally and push back to highs. That could be the case. A big part of trading is being able to stay flexible and not so rigid in your kind of analysis. It's good to have a thesis, but at the same time, know when it's not potentially playing out. And at the moment, I wouldn't say it's not playing out, but we are looking quite bullish. I do need that to start to turn around before I do jump into any shorts. And if so, I'll be happy to try and see if I can swing it back into the lows there. So that's still very much the plan for pound, but waiting for some development in this area here before looking for a short. Aussie dollar, another pair which I was keeping a close eye on this week. Looking a little bit awkward, but I still am interested in some shorts. We broke out of this ascending channel in really nice fashion. Really ascending there. We broke out very well, very aggressive. So basically just looking for the retest of this area for hopefully a lower high and a continuation. I would say Euro, Pound, and Aussie are my three favorite USD pairs right now. And yeah, if I can start to see this one start to develop as well, maybe consolidate, give me some more wicks to the upside, a strong close, that could be a nice opportunity for a short as well. Stops above the high and hopefully maybe a nice continuation lower. So USD is still very interesting to me. USD is still very interesting, but I need to see some rejection. If not, maybe USD weakness is here to stay. Okay, where was I? Why didn't you wait for a pullback at Aussie CHF? Yeah, I could have waited for a pullback, but to be honest, I didn't mind. The risk reward was still decent. It was 2.66 to my target, and anything above a 1 to 2 I'm kind of happy with. I could wait for price to potentially break out of this and then pull back for a retest. I wouldn't actually mind looking for additional entries after that, to be honest. But yeah, I wasn't too worried about the pullback. Of course, the pullback could give you a better entry in terms of the risk reward, but I'm not really too bothered, to be honest. This is kind of a position where I can kind of sit in and go about my day. I probably don't even need to really check the trade too much until pretty much the end of the day, and kind of more monitor the daily candle. So I quite like it because it allows me not to be too caught up with the trade, and it also allows me to focus a bit more of the whole swing. Because if I was to get an entry like this and like a stop loss like this, I'm going to be very, very kind of watching that trader in a lot of detail, because every minor swing is going to be, you know, pretty meaningful, and I don't have a lot of error. I don't have a lot of room for error for this. This one could potentially have a deep pullback, which could be unexpected before pushing up. I can stomach the pullback. With this, you probably won't be able to. Of course, the positive about this is that if it does play out, you could potentially make 3-4 x the profit. So in terms of risk reward, I understand that, but just in terms of time and just in terms of ease of trading, I kind of prefer the entry with the bigger stop loss. I was actually looking for an entry off the lows here, but I was actually away when the entry did form, so I wasn't able to take the trade. But this is kind of the second best opportunity, entering off momentum on the breakout. But I do understand, it's a good question. You could wait for pullbacks. It's kind of preference, really. And the thing about pullbacks as well is that you don't always see pullbacks too. That's one of the disadvantages for pullbacks. Sometimes you get breakouts where they just fly, and the pullback might not happen until much later. So yeah, that's another thing to take into consideration. But the way I see it, it's just pros and cons, what you prefer. I sometimes wait for retest, depending on the situation. Sometimes I'll just take it with a slightly bigger stop loss. In this case, I was happy to. Okay, let's see some pairs that you guys are looking at. Okay, I'm seeing gold. I'm not a big fan of gold, but we can go through it. Yes, I do trade the 4-hour chart. That's my main focus. Sometimes I will drop to an hourly. Sometimes I will even scale high to a daily chart to pick a trade, but the vast majority of my entries are on the 4-hour chart. Okay, so I'll go take a look at gold. Hourly 15-minute. I'm not too sure. I'm not too sure which chart you're talking about. Or generally, do you want me to take a look at the hourly and the 15? I'll take a look at gold first. Gold's been horrendous. You know, let's call it what it is. The price action has not been great. As someone who prefers kind of trending markets, which of course gold has been for the past like year and a half, 2 years, has been trending very well. We're of course right now in a new phase. We're in a phase of consolidation. And this is not such a bad thing because typically with consolidation like this, you're getting ready for the breakout. So I do think whether the price is going to break to the downside or to the upside, I do think there's going to be a pretty big move here for gold. The longer the consolidation, typically the bigger the breakout. So I think with the breakout, there could be some very nice opportunities to look for, whether you're looking to buy or short the breakout or wait for retest, however you want to trade it. I think there's opportunities coming up. At the moment, though, we're still very much within the middle of this range. We've got the highs around here. I would say you've got a pretty critical level support around here as well. And we've just been bouncing back and forth. So I don't see too much of an opportunity. We've been extremely corrective around this area. I was favoring a little bit of a drop there for gold. We saw a slight one, but nothing major. If you're looking for more of a swing position, you kind of want to wait for price to push into resistance around 34.30, 34.40, around this area anyway. And then we can see what price gives us. If we can see some healthy rejection like we've seen previously, we potentially could see another swing right back down again. Unless we see a clean breakout, I'm always going to expect price just to reject the highs and continue to range. So I don't see much of an opportunity unless you're just trying to pick highs and lows within a range, which makes sense. But I wouldn't do anything until we can get back to 34.40 around that area there. And then we can monitor and see what price is giving us. And the same with support. If price can get back to the lows, reject well, I think that's a smart place for a buy. But in terms of the middle price action, I try to stay away because that's where most of the noise is. And in my opinion, it's just a lot more difficult to find good opportunities in the middle of a range than at the extremes. You right the highs or right the lows. It's just a lot easier. But yeah, gold ranging. Looks like we're seeing some momentum. Let's see if it can sustain because there's been a lot of wicks here. So I wouldn't get too excited about that 4-hour candle until it does close. Still got about 3 hours time until it does close, so I wouldn't read too much into that until it does close. But if it can close well, perhaps that does take us back into resistance, and then maybe there's some shorts from there. But not the biggest fan of gold. I prefer silver a lot more. Than gold. Actually, I'm keeping an eye out. I was looking to see if I can short silver this week, but I'm not quite seeing the price action for that. The idea was that we had a strong bearish leg last couple of weeks, which was this leg here. And I was looking to see if I can, wrong tool. I was looking to see if I can catch a pullback of this leg for some more downside. Long term, I'm still very bullish in silver, so I'm still very much looking to buy it, but I was kind of eyeing up the possibility of a retracement to around 35. I think that would be a very nice place for a buy. Going forward, but it doesn't look like we'll see the retracement to get there, unfortunately. But anyway, silver's looking pretty bullish. This is a more attractive pair to trade because at least there's a trending, condition about it rather than just pure sideways. Yeah, maybe if you do prefer sideways markets, then gold is the one to focus on, but I prefer something a bit more trending. So yeah, coming to the week, I was looking for a short. I like this area a lot. Lovely consolidation. Spat out a lot of momentum there, so I was looking to see if we can retrace, correct, and possibly sell off again. But momentum looks like it's breaking through to the upside, so there's no signal to tell me to get into the trade, which is why I kind of rely a lot on candlesticks and reading current price, because that's going to invite me into the trade. And there's many zones where I'm waiting for price to get to, and it just completely disrespects. And if that's the case, I stay away. If, of course, I do see evidence of price respecting those areas, wicks, momentum shifting, then that will be my kind of my confirmation to get into a trade. At this moment in time, silver's looking really bullish. Perhaps we're getting ready to push back to highs. I think if we do break through this area well, probably at that point, I'd be favoring some lower time frame corrections and probably a rally back to the high at that point. So yeah, the original sell bias kind of backing away now from silver. Looks like the buys are kicking back in. We came very close to 40, massive psychological level. Next big one after that will be 50, which I'm pretty sure is where the all-time highs are at. Still a long way to go though. So I do expect a lot of opportunity. Let me see any other requests. Yes, we just had a look at gold. That's true. Markets do range 65% of the time and trend. Yeah, they do consolidate more than they trend. Yeah, I mean that's probably one of the reasons why I do trade a wide range of markets early, because it kind of gives me the opportunity to kind of pick and choose. Because if a market is going to range more than it does trend, well, if you do have enough markets on your watch list, you can kind of sit out the ranges and pick the moments for when it does trend. And again, it doesn't have to be trending amazingly well as well. You know, trends come in different shapes and sizes. You can get some really aggressive trends where prices like this, and it's a clear, very strong bullish trend. You can get some more kind of lightly trending markets, which is something like this, which is probably what you see more often than not in FX. This is more so of a rarity. Does happen from time to time, but this is probably more type of the trends you get. And then you get something in the middle between the two, something a bit more trending, but not as aggressive. So yeah, I do agree. It is worth looking to trade ranging markets as well. I kind of like the breakout opportunities and the break and retest of them. So I do dabble trading ranging markets too. But it's always a lot easier to follow trending markets, whether you're trying to kind of pick counter trend moves off them or just simply looking to follow the trend. But it's definitely a good point though. Anyway, Aussie CADs, okay, precious. We can take a look at that. 4 hours king. I do agree, Shells. I do like 4 hour. It's not too fast, not too slow. It's a good mix. Big fan of the 4 hour chart. Okay, so Aussie CAD looking pretty bullish today. Again, another market that is pretty flat, isn't it? And again, range of markets is not bad. It's just you have to be able to trade to those conditions. You can't be having a trend following strategy in a ranging condition, just like you can't have a ranging strategy and trade it in a trending condition, vice versa. So you just have to make sure that whatever you're doing is fit for a ranging market. But this one's been back and forth. We created some support in this area and looks like there's a slight uptrend to it, but I wouldn't get too excited. Price has respected support pretty well. Looks like we're probably going to drift towards resistance again around 0.9. You got some highs over there, which are feeling a little bit neglected. I feel like price might look to go and run into those highs again soon enough. But I don't see much of an opportunity, because if I want to trade this market, I want to be around these lows. I want to be finding entries here so I can get stop losses below. It'd be great if the market can actually wick through that and then I can enter after the wick. That's always a great confluence when trading ranging markets. But I want to be in this area. I don't want to be in the middle. That's where all the noise is. Difficult place to put any stop losses as well. You're not really protected anywhere, whether you're buying or selling. So it's just not really something I want to be in. If I'm going to trade a range, I want to be as low as possible or as high as possible. And in this case, if I'm buying around 0.888, it would do the job. And if I'm selling around here as well, that's kind of what I want to focus on. So my best advice for Aussie CAD would be wait for price to approach resistance or support, preferably one of these two areas before doing anything. I understand there's some lower time frame areas of resistance, supply and demand within this area, but I just wouldn't be feeling confident to hold a trade there. Maybe if you're looking for a quick scalp, you might find a bit more success, but if you're looking for a trade where you're trying to hold it for more than a day, I would say you want to be as low as or high as possible. So that's kind of the best kind of opportunity I can see for Aussie CAD. Maybe long term, we might be building up slowly to an uptrend. So there could be some trending opportunities in the near future, but that's still probably going to take a few weeks really to fully implement. So yeah, you're going to have to be very patient for that. But at the moment, that's the best I can see for Aussie CAD. Okay, dollar yen. We can take a look at that one as well. What do you think? GU went high despite the interest rate being cut? No idea. I was expecting to see pound drop this afternoon, so I was pretty surprised. I haven't actually read any reports as to why the pound has gained strength. I'm sure you can probably find some reports online to that, but I was expecting to see a weak pound, and it was pretty strong. I mean, I wasn't trading any pound pairs, so I wasn't really too fussed about it, but seeing how strong it was a bit surprising. Okay, so let's take a look at dollar yen. So I haven't actually gone for any yen pairs yet. So dollar yen, it's an interesting one. I think at the moment we still do have this kind of lightly trending bullish market. You can probably effectively call it a range as well, but there is some slight higher highs and higher lows to it. I'm not convinced about this uptrend long term. I do think we'll probably hit a top at some point and eventually get a big sell. That's what I am favoring for dollar yen in maybe the next few weeks. But at the moment, I still just about like the buys for this one. Preferably from this support level. This is kind of what kickstarted this bullish move. We had a really aggressive turn of events after NFP, but we're starting to slow down, starting to become a bit more corrective. And I do think potentially there's some more weakness for the yen as well. So if we can stay corrective, come into this area, maybe see a strong break out of this descending channel, something like this, a nice break of that. That could end up being a really nice entry for a trade, stops below the low, and maybe a swing back to highs. I would say keep an eye on this area. I think that could be a smart area to book some partials or just start to remove risk, keep an eye on the trades. I think that's an area which price might sell off from. But if this light trend does want to continue, I would expect it to hold this area, and then I would naturally expect it to eventually drift back to high. So I think this would be a smart place for a buy, especially if you can get a stop loss below. Maybe if you continue in this corrective mess for a little while and then start to see some momentum, I think that will be a very smart entry signal to confirm that the buyers are stepping in, and we'll likely see a rally. So yeah, dollar yen, there's a slight uptrend here, which I like the look of. Long term, I'm not quite sure about that, how long that uptrend has in play, because I'm looking at these lower highs here. I feel like another one maybe soon about to print, and longer term perhaps we'll probably do something like this, but we can get into that in probably like a month or two time when that's an actual possibility. As of right now, I quite like the buys. Excuse me. Okay, let's go through some chats. Pound yen, okay, we can take a look at pound yen as well. How long you be trading? Also, what's your favorite stuff to trade? Good question. This summer, it's 8 years. 8 years since I've got first introduced to trading. And favorite stuff to trade, I'd probably say pound yen, pound USD. Those are my two more successful currency pairs. But really, I like trading FX. FX, for me, I mean, it's what I started with and what I'm still trading to this day. But I quite like FX. I like the fact that it doesn't go up for too long. It doesn't go down for too long. It corrects around. I like the opportunities it present. So yeah, anything really FX, particularly the majors are the better. The minors can correct a little bit too much sometimes. But pound yen, I kind of have a bit of a soft spot for, and pound USD as well. And funny enough, we're going to take a look at pound yen, which again, another interesting pair, which after the news this morning or afternoon, depending where you're in the world, did throw me off a little bit. I was expecting to see some weakness for pound, but we saw some strength. I said coming into the week, I was quite interested with some shorts around this area, but we're looking very, very bullish. The plan this week was basically looking for the lower high of this leg. We've been very, very corrective on the way up. It's been a very corrective trend, so I haven't really seen much signs of continuation. We've been failing to break through resistance in this area. And of course, last week we had that huge sell. So the plan this week was basically looking for the pullback of this leg after the breakout of this consolidation, and then hopefully looking for a lower high to short back to lows and so on and so forth. So that was the plan for pound yen. But yeah, after the news there and looking at yen being a bit weak, I'm going to have to be a bit patient. If this does continue to pick up steam and continue to push quite hard, I will back away from that bias. And I kind of would probably just reinvestigate things, maybe leave it to the weekend, see how the weekly candle closes, see how Thursday and Friday close, and maybe I come up with a new bias for next week. I probably wouldn't be bullish for pound yen until I see a convincing break of the high here, because as a swing trader, I'm looking to try and hold my trade for a few days And yeah, I don't have much room to trade with. So for me to be bullish, I need to see something like this happen. Then yep, I would be bullish. Next major target back at the highs here around 207, 208. So yeah, I'll be very bullish if that was to happen. But because we had that strong reaction, I was coming into the week with the plan of looking to sell, not really seeing price action just yet fall. I'm not going to rule it out because things can turn bearish in a blink of an eye, really. So still keeping a close eye on pound yen. But if momentum does pick up, I will probably back away. I need to see some rejection kind of ASAP, maybe a bit of a consolidation, momentum picking up with the bears. Then that would be something I would be interested for a short, a push at least back into this low, and hopefully a lot further as well. So yeah, that's been the plan there for pound yen. Anyway, guys, we have come to the end of my segment, so I'm gonna have to love you and leave you. I will be back on, so do not worry. I do have my own channel as well. Not too sure if they've dropped the link to the channel, but I'm sure they will. Yeah, there it is. Check out the channel if you do want to see more of my content, or just come chat to me there as well. I do stream on my channel as well. But really appreciate you guys having me on the stream. Thank you so much for being here. I hope you guys have enjoyed it. Make sure you do like the stream and subscribe to A1 and Trader Nick. But I really appreciate it. We'll catch you guys in the next one.
Thanks for watching today's show. Remember to subscribe if you're new and to turn on post notifications so you don't miss the next one. If you're looking for more free trading content, consider joining our Telegram channel, linked in the description down below, or find free courses, prop firm discounts, and broker sign-up perks on our website a1trading.com. That's all for today. We'll see you back tomorrow.